Steve, thank you very much for joining us this morning. I went to John Kilduff just this past couple of minutes and asked about what would happen hypothetically if the U.S. got more involved in what's happening between Israel and Iran. I wonder what your take is on the market reaction to the U.S. hypothetically becoming more involved in the conflict.
Well, good morning, Dom. And, that is certainly a concern. I would say that right now we seem to be on the sidelines. I think the market, the reason we're seeing a positive market reaction this morning is things didn't get markedly worse over the weekend. I think, were the U.S. to get involved, investors would need to reconsider what's going on. But in general, markets don't really follow geopolitics all that well. And I think obviously, they're watching the oil price, and oil does watch geopolitics very closely. But from a stocks point of view, I think the market is saying, you know what? Israel's a relatively small country. Multinationals don't have much action going on in Israel, that enough to affect their bottom lines, although many do business there. And Iran has basically been out of the world economy for decades. So I think the market's saying, you know what? As long as we stay on the sidelines, and oil stays around here, we can manage this conflict. It doesn't affect stocks that much. If the U.S. were to get involved, different story.
I think it's an interesting point here because geopolitically speaking, over the course of the last, maybe even 2 decades at this point, every time there seems to be something, especially in the Middle East, that looks like it could flare up, things eventually calm down and the markets continue higher. If that's the case this time around, what exactly, Steve, in your mind, is the primary or secondary driver of what's going on in our markets currently speaking?
Oh, the primary driver is momentum, and we're seeing a return to the momentum trade today. It's basically, like we took a day off, and now, everybody can resume their normal activities. When we think about the stocks that have been driving the markets, let me phrase it differently. When geopolitics come into fray, equity markets basically say, how will this affect the bottom lines of my companies? And ultimately, in this case, you're not going to see it too much. So if you've been basically involved, let's say in the AI trade, mega cap tech, this doesn't affect your life too much. It will if oil metastasizes into something and rates have to change and things of that nature. But in the short term, markets are saying, okay, there's, of the stocks that you have up on the board right now, ultimately none of them are that affected by it in the short term. And that's why markets have been able to look through some very messy geopolitics. Sure, that's why I watch oil and bonds. Bonds did not react. Bonds reacted kind of weird on Friday with rates going up. There wasn't much of a flight to safety trade. It was much more about the Fed not being able to cut rates. With the Fed meeting this weekend, no one was expecting a rate cut, but I think people were hoping to get one signaled. Probably not going to happen right now. But in terms of the day-to-day bottom lines of companies, the stuff that equity investors are good at, understanding revenues, cash flows, earnings, this doesn't have an immediate effect as long as we have only a modest rise in oil prices.
And Steve, we've got just a few moments left here. If you were to assess what the economic data is showing, are you generally still positive on the markets vis-a-vis the economy?
I do think the economy is a bit more worrisome, I think, than the markets are letting on here. I think the big risk, as far as I'm concerned, is the fact that we are seeing some slowdowns. So far, the markets kind of look through the tariff stuff much better than we thought. The consumer sentiment numbers have rebounded. But right now, there's nothing that's going to push the Fed off the sidelines. They're concerned about tariffs, understandably so. We still don't really know how those are going to get resolved. The can's been kicked down the road, but nothing's been resolved. And now, if you have the prospect of higher oil prices, the Fed really can't do anything. So my big concern is that the economy slows and the Fed is stuck on the sidelines watching and waiting to see how prices react. But that to me is the thing that could upset the momentum trade in the longer run.